Hello and welcome to episode 14 of Chicago Business Podcast, where we introduce leading executives in the area and learn about how innovation is affecting their businesses. I am your host, Drew Sekula, and today we welcome Sam Rattner, the Chief Executive Officer of Vigtory, a sportsbook startup headquartered here in Chicago with the gravitas to go head-to-head with DraftKings and FanDuel. Hello, Sam. Thank you for joining us this afternoon.
Appreciate it. Yeah, thank you for having me.
Happy to have you on and learn about what you guys have going on over there at Vigtory. So, thanks for joining us. I think you have your beverage of the day with you. Is that a Dunkin' Donuts coffee you have there?
Yeah, Taylor just put it on my desk. Here we go.
There you go. I'm joining you as well. Yeah, stand by here in Chicago. So you're a Dunkin' guy, huh?
Yep. Yeah, I am a Dunkin' guy. Tried and true.
Very good. So let's maybe start by talking about first just the name of your company. So Vigtory, Vigtory. Why don't you, for those who don't know much about the space, can you explain what that means?
Yeah, sure. So, the sports betting space is an evolving climate here in the U.S. The American market's much different than the European market, but there's kind of these baked-in fees, sometimes called the juice, sometimes called the vig, kind of hence the name on play on words with Vigtory. We're going to be the most competitively priced sports book in the U.S. market. Our competitors charge anywhere from 10 to 20% on the juice or the vig. We're going to be substantially lower than that. Price is a big part of value, but it's really about brand positioning. There's a big difference between being the value offering, but being like Payless Shoes or Kayak Hotels, which are great businesses and serve for their demographic, but being the value offering with superior product. Robinhood has done that really well in the online brokerage space, being a $0 trading brokerage with superior product for their demographic in comparison to like a TD Ameritrade or E-Trade, Charles Schwab. Redfin's done it really well in real estate. And so that's what we're trying to do in sports, with our internal trading and risk management team. And, we have a couple partners to help us on that end too. We really fight to not pass on those fees to consumers so people can have the greatest betting experience at the best price.
Yeah, it's very interesting. I mean, it seems like the current market, it's just early in the game, I guess, with the Supreme Court ruling a couple of years ago, and with all the states kind of coming online, it seems like the legitimate, so much of the betting has been kind of through, less, whatever you want to call them. There's been offshore betting, and there's been a lot of more, call them illegitimate sources, but it seems like when that has come on online now, still those spreads or the juice hasn't really come down very much, and so
right.
That's something that you guys are offering, I guess.
Yeah, and especially while we're really serving the whole market, kind of left to right with like the younger demographic, which is why we've done a really great deal with the Action Network. The Action Network has over 3 million of some of the most engaged sports bettors in the United States. So we're embedding all of their content and media on the media side, which is, of course, all the former ESPN execs who came over to help them run that, Darren Rovell and Chad Millman. And then on the technology side, they probably have the most subscribed consumer-facing sports betting data and analytics platform. So we're embedding all of those tools directly into our platform. So immediate brand handshake with the people who care most about sports betting in that demographic, who really have bet at a higher frequency than some of the more retail platforms. And then we're really doing a lot of stuff on the VIP loyalty and customer experience side for people who bet in the high hundreds and low thousands, utilizing all the assets that we get from the league, and to create those experiences. And price is a big part of that. Unlike trading, which is like a fixed trading fee, the VIG is a percentage. So the more you bet, the more you care. Someone who's betting $1,000 cares more than someone who's betting $50. And someone who's betting 5,000 cares more than the guy who's betting 1,000. So, price being a big part of value kind of continues to grow in terms of how valuable it is to a consumer. And if you look at the overseas market, they have competed on price a lot. It's a much more price sensitive market. And it's not that the US market is not price sensitive, but it's more about the branding of being price sensitive. Like think about people who are trading on Robinhood. Do they think every time they make a trade how much they're really saving on a zero trading fee? Probably not, but they always like being in the environment where they just know they're always getting the best price. And so that's what we want to do with Vigtory, is give people the greatest betting experience, but that they always feel whether they're line shopping or not, that I know at least I'm getting the best price, the lowest vig, and that's where I want to be. So,
Right. So how are you able to afford to do that and offer the kind of lowest margin? Is it's a numbers game and you're trying to make it up in volume, or is it that your cost of your customer acquisition is lower because you're dealing with higher end bettors, or how does that work?
yeah, it's kind of a accumulation of all of those things. So, as I said, we have an internal trading and risk management team. We also have another partner that we're working with that's in the quantitative trading space, that does a lot of international pricing. Not only is a leading pricing source in the European and Asian markets in sports, but in commodities and equities and currencies. So how we do pricing is very similar to how it's done in the financial markets. So we're much tighter. We also don't have all those high revenue shares for outsourcing it. A lot of our competitors outsource these things to these providers, and part of the vig that they're charging is to make up for some of those fees in essence. So we save there. We're also much more targeted on marketing, so it's very performance driven. Everything we've done on like the media and integration side. So for example, like the Action Network is a very targeted integration, and that's how we do marketing. So it's a lot of retargeting from Google to paid social, creating creative content across digital and social, less spray and pray on like TV, billboard, radio. A lot of books who are doing that, which is a good play if that's the route you're going. It's more of like a 4 to 5 year brand play. So it's, hey, we're going to be anywhere and everywhere for the next 4 or 5 years, and on pure brand recognition, it's going to pay off. And this happens in every industry. This happens in tech. It happens in e-commerce. It happens in real estate. So, everything we're doing is much more targeted. So as you said, we're much more linear in going after, the consumer that we're going after for the most part. The more frequent better, the more engaged better, or the higher better, is a more loyal customer. And, when the thing about price is, if you're willing to jump from one book to another for a $10 bonus promotion or sign up campaign, well, how much do you really love that person's product? And if, one book has a, $10 promotion on Thursday night for football, another book has a $50 promotion on Sunday, people just bounce between books for the best offering. Having the best price is essentially a lifetime, bonus. And so that becomes, you get a more loyal customer by doing that. And so we spend less, on our customer acquisition costs than probably some of our competitors because we're more targeted. But it's also more complementary to them. Like, we're not battling it out with the DraftKings, FanDuels, and Barstools going after that demographic. It's more of the more frequent and engaged sports bettor, whether that's someone who bets frequently, bets a lot of money, or is traditionally still living with bookies or the offshore market. Because to be honest, when you look at the size of the U.S. regulated market, it's still substantially smaller than the gray market. You look at, my partner, Scott Butera, and he's out in Vegas right now, and Vegas has had legal sports betting for decades, but they still have the highest population of bookies and offshore volume coming from the state of Nevada. So while a lot of bettors are looking for a regulated environment, the current players aren't really that for a lot of the bigger bettors, more sophisticated bettors. They're more for the retail experience. And so we feel like bringing that experience that traditionally lives with bookies and offshore to a regulated environment in the U.S. is really promising.
Nice. Yeah, it sounds like if you can capture that market, there's a ton there, and they are going to be the ones that are looking to reduce that juice a little bit, right? And looking for opportunities. I assume that they're finding more competitive. They have traditionally found more competitive offerings overseas, which is why they've been there, right?
Yeah, and when you give them access, what we're doing with product is really taking all the verticals of where people consume sport and putting them into a comprehensive platform. So things like ticketing, merchandising, streaming, data and analytics. For example, data and analytics, like we've done this deal with Action and some others. Some books are like, they shy away from providing data and analytics to their users. They have this thesis of, oh, well, if we provide them data, they're going to beat us. And that might be the case sometimes, but the reality is it's what consumers want. The more people, are engaging on the platform, it increases fan engagement, and fan engagement will always organically drive betting activity. And we'd much rather have meaningful betting activity than kind of just one-offs here and there based on them coming for bonuses and promotions that they know when they come, they're going to get access to data. They're going to be able to stream games. They're going to be able to have access to ticketing and merchandising, and they're going to be able to do that and always have the best price and not be line shopping. So.
How are you able to offer like streaming of the games? And isn't there a lot of licensing concerns that
Yeah,
you have
so
to work through?
streaming is kind of a bifurcated market. Sometimes the rights are owned directly by the leagues. Sometimes they're owned by their distributors. So it's never a one-stop shop. Obviously, we have an in-house engineering team that's built all the overlays for everything related to streaming and all plugins, back-end APIs. So we're working with dozens of partners. Some for the international sports, soccer, cricket, tennis, rugby. Some with OTT providers that we're doing some exclusivity stuff out that will be coming out in the news over the next month or two. And then, it'll be an evolving relationship, I think, with all the operators when it comes to core U.S. sports, because some of those are owned by the leagues themselves. But, with ourselves and, a lot of other operators having direct, relationships with, the NFL, the NBA, Major League Baseball, and the NHL, I think there'll be an evolution around the streaming because I think they do see a lot of value. It's much easier to kind of just do wide canister deals where, someone's willing to pull out the checkbook and then pay off for the distribution rights. But, how meaningful does that become to the league in the long term? It doesn't really increase the lifetime value of their users and their customers versus giving everyone access and letting products compete. That becomes more meaningful for the leagues over time, which is what a lot of them are considering now.
So you are releasing on kind of a state by state basis in terms of how you're going live, or talk to me a little bit about that.
Yeah, so as you mentioned, like 2.5 years ago now, I think it was May of 18, the federal ban on sports betting was struck down. They left it to the states individually to decide when it comes to, the regulatory environment and legislation. So we're working very closely in about 12 markets right now. We're going to be launching in 3 to 4. And it's similar to like cannabis or any other regulated industry where it's state by state. So, you're going through regulatory compliance and, every jurisdiction, your technology is going through the state technical labs and all those jurisdictions. So over the next few weeks, our tech will be through regulatory compliance in every legal sports betting market in the United States. And we are finalizing market access in 3 to 4 markets now, but our goal is to be in about 12 states within the next 12 to 15 months. Which is where we're at the moment. So, and those initial states will likely be New Jersey, Iowa, Indiana. We're working on, close opportunities here in our home state of Illinois and the city of Chicago, Ohio, Colorado, and some others.
How did you pick Chicago as a place to headquarter?
One, I grew up here. Although there's been, large debates on whether or not we should move the company. Chicago is one of those places where we have one of the best sports cities, if not the number one sports city in the country. We got the Cubs, the Sox, the Bulls, the Blackhawks, the Bears, etc. There's also a huge demand for people wanting to work at sports data and analytics startups and sports betting especially. And for being such a massive sports city, we really lack sports startups. So we'd love to be here for that. We also have access to tremendous engineering talent, both on the trading and risk management side. I mean, we're a top 1, 2, or 3 hub for high frequency trading, not only in the country, but in the world. So that coupled with, extremely talented sports marketing and media executives really creates, a really great place for us to be here in Chicago.
Nice. Let's take a quick step back and talk a little bit about your origin story and that connection to Chicago.
Yeah. So grew up in northern suburbs of Chicago. Initially, Vigtory kind of started out as a back-end risk management application for other sportsbook operators. We then realized it was a super bifurcated market, and there were a lot of nuances to why it made it difficult for a lot of other companies to compete on price, stemming from outsourcing risk management, outsourcing product. They kind of view these things as a commodity, and then they're cross-selling a media audience, which is a great business model if that's the model you're going for. For example, DraftKings and FanDuel have done a phenomenal job at cross-selling their fantasy sports user base onto the sports book. You look at media companies like The Score, and now Barstool has done a phenomenal job at cross-selling their media audience. And we just know that, where they're cross-selling them to, though, it really hasn't changed in 100 years other than it's on a mobile app. So we saw a lot of opportunity to innovate on the consumer-facing experience front, which is why we kind of internalized all the risk management applications that we had built for other operators to push a consumer-facing sportsbook ourselves. So that's a little bit about the origin story. Scott Butera, my partner, joined the company earlier this summer. I was going to have Scott jump on this, but we had timing mix up. But Scott's had a tremendous career in both the capital markets and gaming and leisure. Spent 15 years on Wall Street, Lybrand and Cooper, Credit Suisse. He was on the executive team there who handled all of our current president Donald Trump's assets on behalf of Trump Entertainment and Trump Resorts. He then went and worked for Donald and was the president restructuring Trump Entertainment in the mid 2000s. Then went and did it at Foxwoods, which is still the largest resort in North America. It's over 7 million square feet. They did a restructuring there. He turned them around. Then went and did it for Tropicana and brought in Carl Icahn, who was the largest shareholder with Tropicana, turned them around. It was really the vehicle that helped Carl purchase El Dorado and ultimately now Caesars. So that was very meaningful. So Scott's had a long career in gaming, spent some time in sports. He was the commissioner of the Arena Football League and helped them do some restructuring. And then he spent the last 2 years as the president of interactive gaming at MGM, alongside at the time Jim Uren, who was their acting CEO. BetMGM is a really great product. Scott went in there; they really had nothing. And I had gotten to know Scott a little bit after that time, and our visions were always aligned on what he wanted to do with the team at MGM and what we were doing at Vigtory. MGM did a deal with, they kind of combined with Roar Digital, that they created their in-house marketing agency, and then worked with GVC, their provider out in London, to push BetMGM. And they've done a really great job. Corona hit. They went from probably doing 3 or 4 billion in EBITDA to nothing, which is not their fault. It's just the global economy. A lot of gaming companies and brick and mortar real estate companies were really hurt by that. So a lot of people decided, since interactive was probably going to be put on the sidelines for the moment, that there were other opportunities. And Scott, my vision at Vigtory was always very aligned with what Scott and the broader team wanted to do at MGM. So it was a no-brainer for him to join. But that's a little bit about the company, how we got started, where we are now. We just hired a few months ago Stephen Astrachan, who's our VP of marketing. Stephen was the first U.S. marketing hire for PointsBet at their U.S. office. He was their head of media and marketing, really helped build out their digital and social teams for all their creative content, which is great company. They've done a really great job in the U.S. market now, so we're pumped to have Stephen. So that's what we're doing. We're really just trying to build the greatest experience that we can, that, with a bunch of guys and gals with Taylor, who've done a tremendous of great work in the space, whether it's in brick and mortar gaming, leisure, interactive, sports betting, and trying to build a platform we know should exist in the U.S. market.
Nice. And you've previously built and sold another business, isn't that right?
Yeah, so Engine Sports was a company I started. Engine Sports was a SaaS platform that allowed non-technical but high-volume retail bettors the ability to build custom algorithmic betting strategies in a couple of programming languages. This is in 2016, 2017, where at the time sports betting was still predominantly illegal in the United States. And so, all of those clients were out in the UK and other parts of the EU. Overseas, they have the Betfair Exchange, which is owned by Flutter, who also owns FanDuel. If you're not familiar, the Betfair Exchange is essentially a live sports exchange similar to a stock exchange, how people trade commodities and equities and currencies. It's very similar to, how we handle pricing and risk management here. But it was a platform where you could say, hey, LeBron James on the road in the playoff in the fourth quarter, what's his free throw percentage over time? It would then generate the code for you. And then you could trade that algorithmically on the Betfair Exchange. So we did that. The thing about Engine Sports, it was a really great platform. But what you realize when you're overseas is the European market is much more transactional, and that's not its detriment. It's just the nature of the industry. It's been along for a long time. It's a much more mature market. So TechBet, a company out of Hong Kong, was doing a data and analytics roll-up of consumer-facing sports betting plays. We ended up being one of those companies in the roll-up. So did that. That was really successful. Really learned the European market, how the market worked, both on a technological level, on a pricing level, regulatory environment. And so that's why I always thought there was a big opportunity to come innovate here in the U.S. And, Scott always was very aligned with that too. So.
Nice. So are you guys are focused on the U.S. market then, or do you have an international plans as well?
Yeah. So right now we're U.S. focused. I would say our goal is to build a leading sports betting and iGaming, iCasino brand here in the U.S. As we do that, we're definitely going to innovate across a few other verticals. We're very, very deep and interested in the esports market, social gaming, and then as a fifth vertical, potentially creating all of those experiences into a retail experience. So whether that's through lounges or entertainment zones at some of the venues, at the arenas that we're speaking with, or in some alternative facet, I think over the next 4 to 7 years, we want to build a really great and deep interactive gaming company. But we're going to start sports and entertainment. And so sports betting is our primary focus, and iCasino as well, as that's kind of coupled with each other.
So what sports do you guys cover, and do you do like prop bets as well?
Yeah, every sport. So every U.S. sport, every American sport, all the core liquid European ones, so soccer, cricket, rugby, tennis, volleyball. We pretty much have every sport. We have deep relationships not only with some of the gold tier pricing sources here in the U.S., but also a lot of international data sources that we're working with for some of the more intricate stuff to price. So, for example, it's much more difficult to price props on Egyptian volleyball than it is on, will LeBron James score 30 points? There's much less data. It's much more, complicated to cipher the metadata and try to figure out pricing in real time. But every core sport, we're going to have a ton of new and innovative live betting. We think live betting is the future of the U.S. market, similar to how it's evolved overseas. Live betting is one of those markets where it's a natural evolution. People start betting on games before the game, and they immediately think in the middle of the game when a certain play happens, I would have loved to bet that. Well, now you can in the U.S. market. Every book has live betting, and we're trying to go a step further and a step deeper to try to offer new and innovative experiences in a live betting format that other books don't have. So,
nice. So are you guys involved in any of the daily fantasy type of activity as well?
We are not. And it's actually not on our radar at all. I think DraftKings and FanDuel have done a really great job of daily fantasy. I think especially the team at DraftKings has really embraced what it means to be a sports fan. I think when it comes to daily fantasy cross-selling onto the sports book, the one thing we've found, there's kind of three tiers to sports bettors. On the far left, you have, the free-to-play player. There's a lot of these integrations. CBS has done some work there with Will Hill. MGM and Yahoo have had a really good evolving relationship. The one thing we found with free-to-money players is someone who's playing a free-to-play game isn't really testing it on whether or not they want to play a paid game. They're just not a gambler, which is fine. But then like daily fantasy is that intermediary, right? It's like adjacent to sports betting, like very related, but someone who's a $20, $30, $40 daily fantasy sports bettor just does not become a $500 or daily fantasy football player, just does not become a $500 sports bettor. And so we, as getting into fantasy as a prerequisite to cross the line onto the sports book, not only is not super ROI positive, generally, but unless you own the majority of the brand, it probably doesn't work, which is why DraftKings and FanDuel do a good job at it. So daily fantasy for us is not a vertical we're going to get into. And anyone who's getting into it to cross onto the sports book is going to have to compete with, the two 800-pound gorillas. So it's not on our radar.
Yeah. What about esports?
Esports is super interesting to us. 76 Capital is an investor of ours. They're a sports tech venture fund out of Philadelphia. They do a ton of work in the esports sector. So it's got me really embedded in it. I know a lot of other guys on our team have been very deep in it as well. We're doing a lot of research on that, having a ton of conversations. I think esports betting could be really promising. New Jersey has now legalized that, so you can bet on esports. Other states will probably follow. There are some, difficulties with that. There's inherent integrity issues. Whether one, it's the age of the player. Can someone really be betting on a 14-year-old playing Call of Duty or FIFA or stuff like that? There's also, for example, like in sports betting, most of the leagues, if you have a relationship with the leagues, you don't really have markets to bet on negative plays. So to bet on like, will someone fumble the ball? Will they drop a pass? Because it's much more easy for people to do that than it is to actually make a positive play. Esports, it's very difficult to track because you can't really tell, can someone purposely be dropping a football in Madden as much as you can maybe in a live game when there's a million cameras on a player. So I think there's a lot of integrity issues there on the betting side of esports. We're definitely very involved in those conversations, and if we can get there, we will. But we're very bullish on the broader verticals that esports follows. Tons of engagement, tons of brand equity with a lot of the companies who have done well so far. And I think there's a lot of opportunities for us on what we're doing on both the retail side of things and the VIP kind of like customer experience side to integrate with esports down the road.
Nice. Yeah, I know there's a lot of people excited about it, and then trying to figure out how it fits in is there's all sorts of challenges there. So from a risk management perspective, so you guys are setting your own lines, and then you have tons of regulatory risk as well. What does your team look like in that regard?
Yeah, so over the next, I'd say about 60 days or so, our trading team internally will be about just shy of 20 people. And like I mentioned, we have another partner we're working with who's in the global liquidity market. We'll have about a 25-person trading team that's designated specifically for our book. So that team will be just shy of 50. there's a lot of verticals when it comes to quote unquote trading in sports. You have risk management, you have pricing, you have the feeds, and then you have trading. So, how it mostly works. Oh, I'm getting a Zoom notification. Hold on a second. I think we're good. Essentially how it works. So, for example, we have relationships with the leagues, to get authorized data from their authorized data distributors. That data goes, from, for example, in the NBA, there's pretty much servers underneath every arena. Goes from the scoreboard to the servers for, to the league office for verification, and then into the ADD feed that goes to us and as real time as possible. And so we ingest that feed while we do some initial pricing in house. While we do some initial pricing in-house, we're much more set up to handle live betting, props, and then things that react in real time. Some of the pre-market kind of pricing is a little arbitrary. If everyone in the market is at, bears -6, but our internal trading thinks it should be at, 7.5, we might think that's the better price, but if you're not competitive with the rest of the market, can you really set it at that? So where margins really made and where great pricing can get passed on to consumers is more live and more on alternative markets like props, which, like I said, we do some in-house, but we also rely on some other feeds with some people who are doing some really innovative stuff in the space, whether that is on, in machine learning and AI for props and alternative markets, or if it's for live betting and data and analytics and behavioral analysis. So all of those things, again, increase our margins. We don't outsource as much for revenue shares to third-party providers, which is why we can be competitive on pricing.
Nice. Yeah, it sounds like you have to. So obviously, a high barriers to entry in terms of trying to build something as robust as what you guys have there. So that sounds very interesting. From an investor standpoint, you mentioned one of your investors, but what kind of backing do you have?
So good question. We're going to be exploring capital opportunities, and we are at the moment on a holistic level. I want to be a little careful on what I say, but there is no doubt that there's the floor to play in this game. DraftKings is sitting at over $1 billion in cash. FanDuel's backed by Flutter. PointsBet's raised capital. The Score is a public entity. And so we're definitely taking it very seriously. And we'll definitely likely have some updates over the next quarter on what that looks like for us.
Right. How have you had to adapt your business to COVID? It seems like, you're still in ramp up phase. So, but yeah, tell me a little bit how
it's been
COVID has
interesting.
changed.
Obviously, Chicago's been, one of those markets that's been hit pretty hard, similar to New York, Pennsylvania. For until about a month ago, for about a 5 or 6 month stretch, everyone was primarily remote. Luckily, we're a nimble, flat enough organization where everyone can communicate. The engineering team, not only internally with our marketing team, but then also, to all of our, providers and our partners, whether it's, with the leagues or with action or with pricing, et cetera. So it's definitely been an interesting time. I think it's been a more interesting time for sports. It's crazy to see it all over the board and how some of the leagues have done. The NBA did such a good job with the bubble. Obviously, 0 positive corona tests is like, I would like to say a miracle, but really not, because Adam Silver and their team did a phenomenal job at making sure everyone followed their guidelines and everything. I think it's been an interesting time for the sports betting market generally. I think it's provided a lot of companies an opportunity to really sit down and figure out how to innovate, especially at a time when there weren't sports for a while. And even now, there's still not that many sports going on, especially with the finals having ended and everything winding down. So I think it's stirred a lot of conversation on innovation across certain verticals. I think it's provided a lot of younger companies like ourselves the opportunity to catch up. A lot of our competitors were bleeding cash, losing revenue, whether that was from advertising on March Madness they didn't realize revenue from, or deeper into the playoffs and other sports. So it's been a really good time for early stage companies that are well capitalized, like ourselves, to kind of get everything in line on the regulatory environment, on the product environment, and just across the board.
Sounds great. How else is innovation important to Vigtory? It seems like that's everything that you guys are doing is as an innovation.
Yeah, very important. For us, all of our competitors really outsource product. And again, they're cross-selling their audiences, which is a great business model when you have an audience. And for us, it's really about innovating the experience. So like I said, we're taking all the verticals of where people are consuming sports, and building them into Vigtory as a comprehensive platform. Hopefully we do that not only in sports, but in iGaming and casino, in esports and social, in a retail environment. We're a tech company. We're building a lot of technology. We're doing some really, really cool things that we're excited to share with everyone and push to the market later this year. So technology is very important to us. Let me put it this way. The US market doesn't need another sportsbook that's doing the same thing as everybody else. I think a lot of people are craving new experiences. If they're willing to jump from one book to another for a $50 promo on Thursday Night Football, they're clearly looking for a new experience, and we're going to deliver that. And we're going to deliver it not only in sports betting, but in all the adjacent verticals that feed into it.
It's super exciting and great to hear that you guys are doing that here in Chicago. So to learn more, people should, I assume, check out your website, betvictory.com.
Yep.
Anywhere else they should look?
No, betvictory.com, the place to go right now. You can sign up and be on our waiting list. We'll be live on the App Store and iOS, and then live for Android soon. We'll be pushing all those promotions for everyone to be able to see there. So we're excited to come to the market. We're excited to offer some great products at a great price, really creating a state-of-the-art customer experience for the sports betting market here in the U.S.
That's great. Is there anything else you'd like to add?
I don't think so. Taylor, you got anything? I'm sitting with Taylor Kashima. She can get on the thing.
Hi, Taylor.
Yeah. No, I think that's it. That's all I got. I really appreciate you having me on, having us on. Always great to chat with people, not only who love the market, but are in Chicago. So.
Yeah, well, hopefully we'll get some good feedback on it, and thanks for joining.
No, yeah, definitely.
All right. Have a great day.
Yeah,
Cheers.
sure.